Okay, why don't we get going? Well, everybody, welcome. We are still in the twilight zone of coronavirus, and as you can appreciate, we're all doing our best, just like you are, to try to normalize an otherwise chaotic situation. And we've got a really neat collaborative, as I mentioned before, a nonprofit resource network, Santa Barbara Foundation, Visionality, and Center for Nonprofit Leadership at Cal Lutheran have been doing our best to bring valuable information and resources to the entire nonprofit sector in the central and southern 805. So I want to give you a quick shout out and say thank you to our team who's on the call today, the Visionality team, as well as our other sponsors for working together. It's been really a great pleasure. And something that has obviously been quite an urgent issue in the time of everything being shut down is how do we keep our doors open when everything is shut down? And I think I can speak for many of us in that we're all kind of have a mix of anxiety and fear and anticipation of what's happening next. And while we're trying to address this, we put together this webinar today to give you an idea of how to take advantage of the stimulus package that was passed recently, the $350+ billion, and how much of that is for us in the nonprofit sector and small business. How do we access those funds? How do we move forward? How long are they going to be available? And a number of questions, as you can imagine, that we're asking ourselves. And we were fortunate enough to have Clare Briglio from the Economic Development Corporation, who is thankfully is able to join us today. We are going to spend almost 90 minutes. We advertise this as an hour, but given the incredible interest in this particular webinar, we're going to take a full 90 minutes, spend about 30 minutes on a presentation and about 60 minutes on the actual questions themselves. A few housekeeping items related. We're going to record this. We'll make sure that all of you who've registered receive the recording as well as post it on our respective websites. The Visionality team is going to be taking down the questions and doing their best to put together some question answer in a document format that we'll also be able to share. And then obviously all of our respective teams are going to continue to publish and share resources as they come to us from the outside, from the EDC team and otherwise. So we're going to do our best here. And I just want to recognize that, this is a really intense and stressful time for all of us. We're all kind of bumping around, frankly, in the dark, trying to figure out how to move forward. Even our partners at the banks, the lending institutions, organizations like EDC and ourselves, literally it's a brand new day and everything is wide open. It's changing hour by hour. So please bear with us in that we may not have answers to everything that you have questions about today. Because frankly, a lot of those questions are just being generated and the answers have not been figured out yet. There's a lot of confusion and concern on how to move, how the stimulus funds are going to actually impact us and how to access them and distribute them. But we'll do our best to share with you the information that we have today, and knowing that we will do our best to share with you any changes as we move forward. So just as a reminder, if you do want to ask questions, there is a Q&A button at the bottom of your Zoom screen. The Visionality team will be managing that, and we'll do our best to order those and make sure that any pressing questions get answered. And also keep note that we are not going to be taking questions until the presentation is done, or at least we won't be answering those questions specifically, because we want to make sure that the presentation is fully complete and you have a chance. Many of these questions, I'm sure, will be answered by the presentations, or at least some of them. And any ones that are not, we will do our best to answer them live. Again, will be recorded. We'll share this out as after we get done with the webinar in the next 24 to 48 hours. So with all that said, I want to welcome Clare Briglio from the Economic Development Corporation. You've been very gracious to spend your time with us. I know you spend a lot of time with small business. So maybe you could take an opportunity just to introduce yourself, what EDC does, and then the floor is yours. And if you need any help, Clare, please let me know. Otherwise, good luck.
Thank you, David. I appreciate it. And it's a privilege to be with you all here today. My name is Clare Briglio, as David mentioned. I'm the Communications and Business Disruption Resource Director for the Economic Development Collaborative, which serves Santa Barbara and Ventura County through the Small Business Development Center. And I know that we're talking about nonprofits and nonprofit resources today, how you might access the federal, state, and local opportunities that are available at this moment. I appreciate David mentioning that this is a fluid situation, meaning things do change hour by hour. I'm going to talk about as much as I know right now of what is available to you, and I would encourage you throughout the webinar today, again, to hold your questions until the end, because I know I'm going to cover a lot of them I'm going to answer a lot of them through the webinar. But also know that, as things change, I encourage you to sign up for a webinar that you might see tomorrow on the same topic, because things are changing all the time. I have been the communications director since 2018 for the Economic Development Collaborative, and we serve about 900 businesses and nonprofits in Santa Barbara and Ventura County through free business consulting services. We are funded by the Small Business Administration, and we have just expanded our services to include nonprofit, no-cost technical assistance. That means we have advisors. We have about 30 advisors on staff with every area of expertise that a nonprofit could potentially need. And right now we're working with quite a few on helping them access capital and helping them develop strategies to be able to retain workers, understand how the EDD programs work for them, and we're going to be talking more about that today. But I did want to mention before I jump into the PowerPoint that since 2017, actually, I've been the communications director since 2017. I've gone through now 3 federally declared disasters in Santa Barbara and Ventura County. So I know that if you've been around, Santa Barbara or Ventura County since that time, we've all gone through the Thomas Fire, the Hill and Woolsey Fire, the mud flow in Montecito. I've known people that didn't make it during those moments, and our communities have been through a lot. And so I've worked with personally hundreds and hundreds of clients in those situations, and nearly 1,000 clients being a small business advisor for the past 8 years. So you're important, your situation is important, your questions are important, and I will answer them to the best of my ability today. And if we do not have time to answer them today, we will get back to you. So with that being said, I'm going to share my screen, and we're going to go through the presentation. There we go. Now, again, we're talking about how to navigate the local, state, and federal resources that are currently available for nonprofit organizations. And as you know, nonprofits are a little different. The federal government looks at them differently. You might not pay taxes in certain areas, and that's fine, but certain programs have been expanded to you during this moment. But before we go into those, I want to encourage you, and this might be repeat for a number of people. That's okay. Sometimes you have to hear things 4 or 5 times. But the first thing we encourage every entity to do, whether you're a business or a nonprofit, is to contact your insurance provider, because most of the organizations that we've worked with in the past few years, we've encouraged them to purchase business interruption insurance. Now, if you have that as a nonprofit, you can have business interruption insurance. As a nonprofit, and if you have that, you might have heard that, oh, guess what, pandemic is not covered. And so I'm not covered if I've experienced loss of sales or loss of income in any way. I want to encourage you to hold on. because at this point, we're not sure how the government will respond to insurance companies saying, by the way, we're not going to cover this claim for you. So if anyone has questions about insurance, we can talk about that at the end. But right now, my best advice is just to hold on for the next few weeks, the next few months, to see how this all rolls out. Number two, you want to track your losses. And this is important during any moment of disruption. You want to understand how much you've lost, how much income you've lost. Look at last year compared to this year. Start evaluating that, because as you fill out these applications, whether it's for the payroll or paycheck protection program or the disaster economic injury disaster loan, you're going to want to know what your losses and what your projected estimated losses are. Number three, this might not apply to all nonprofits, but for some that actually sell product or in some way, you want to make sure that you have an understanding of what your performance-based contracts are with your suppliers. So if you have actually a supply chain with your nonprofit, we've worked with organizations that their supply chain has been completely disrupted because of this. Some of their product is coming from China, for example, and it's been delayed. And there are certain suppliers who will claim what is called force majeure. It's basically a limitation of liability, saying it was an act of God, I couldn't handle this, so I'm not going to provide you what I said I was going to provide you. We have an attorney that you can meet with at no cost to understand what your liability is and what the supplier's liability is to get through that. And number four, I encourage you, if you are self-employed or unemployed, or if you have lost hours or wages in any way during this moment in time, I encourage you to file for unemployment. Also, if you are considering a furlough with your employees right now, we're going to talk about that a little bit later. I'm going to encourage you to not conduct a furlough, not do a furlough, but allow your employees to apply for unemployment, and I'll explain why in a few minutes. And number five is understand your cash reserves. You know, we've gone through now 3 disasters in a period of 4 years, or in as many years, and we've seen a lot of people exhaust their personal savings and their company savings unnecessarily, max out credit card debt at really high interest rates, when there's opportunities that you can apply for lower interest loans or grants at this point, where you do not have to sacrifice your personal cash reserves. And that being said, I know that for some of us, those cash reserves are already small or limited because of everything that we've gone through the past few years. So pay attention today to what is available to you, so you do not have to do that. Okay, so very quickly, we're going to look at and compare the benefit and program options between unemployment, EDD's unemployment, EDD's work share program, EDD's partial unemployment program, and the SBA Paycheck Protection Program, and the SBA Economic Injury Disaster Loan. And I'm very deliberate in using EDD and the SBA to compare and to clarify where these products and where these programs are coming from, because the SBDC, the Small Business Development Center, the Economic Development Collaborative, where I work, is often confused with these programs and services. We are not the EDD and we are not the SBA. So we are answering questions to the best of our ability to help you decide which path makes most sense for you and your nonprofit at this time. And that being said, the SBA is a funding partner of ours, and we do walk with clients if they apply for the Paycheck Protection Program, for example, or most certainly the Economic Injury Disaster Loan. We do walk with clients to help them become loan ready or understand the financial implications of applying for those such loans at no cost. But we are not the SBA and we are not the EDD. Okay, so unemployment for nonprofits. Unemployment for nonprofits functions a little differently than businesses. And again, apologies if this is a repeat, but for sake of clarity today, we're going to be going through this so you have an understanding of how these benefits are going to be accessed and how you're going to be paying for them if and when you choose to access them. So the CARES Act that was passed a number of gosh, feels like a month ago, but it was only like a week and a half ago, includes a specific provision allowing nonprofits to be reimbursed for half of the costs incurred through the end of 2020 to pay unemployment benefits. So I want to say that outright first. They included a specific provision allowing nonprofits to be reimbursed for half of the costs incurred through the end of 2020 to pay for unemployment benefits. And the reason this is important, in case you don't know, is because nonprofits fall into three categories when it's related to unemployment insurance. There's three categories. So it's an experience rating, and this all this means is the way that you invest or not invest as an organization into unemployment insurance as a business would. So in an experience rating, nonprofits pay into an unemployment insurance account just like all other businesses, and through payroll taxes incurred on each employee paycheck. So you'll see that on the employee paycheck. So when a former employee files an unemployment claim, those funds come from the UI account that you have paid into. So you've already paid into that as a nonprofit, and they've already paid into it as an employee. The reimbursable method is the second category. So nonprofits, these are nonprofits that do not pay into a UI account. Their employees are not paying into a UI account. And when a former employee files an unemployment claim, the organization must reimburse the state for the full cost of the unemployment benefits paid to the former employee. And the third category is for special exclusion entities, and this primarily applies to religious and educational institutions. And these nonprofits are exempt from UI. They don't pay into this plan at all. So in these scenarios, let's say your organization participates as an experience rating organization. It means that your organization is using the experience rating method for your unemployment insurance and short-term disability, because both of these programs kind of work hand in hand. Your employees can file for unemployment claims, and it will come out of your organization's UI account. Okay, and your UI rate may increase next year based on the number of claims from your organization. This is really important to note. This is not a may, this is something that will happen. When you allow employees to file for unemployment and you've already invested in their account, they've already invested in their account, your rate for unemployment benefits will increase over time. If you use the reimbursable method, your organization for UI and SDI, your employee can file for unemployment and your organization will be expected to reimburse the state for the full cost of the benefit, not including the additional $600 increase included in the CARES Act. And I'm going to go over that in a minute, which is paid by the state and reimbursed by the federal government. So if you use the reimbursable method, just like at the end of the year when you're required to pay back the state for any unemployment benefits that were incurred by employees that left your employ, you are going to be required to pay that back. For special exclusion entities, if that is you, in this situation, essentially your benefits are determined by a federally declared disaster. And because we are in such a scenario, the president will declare disaster and the state will also have to declare disaster. And it's currently up to state rule to determine whether or not your entity, your church organization, your religious organization is eligible for unemployment benefits. No matter what you are, I'm going to go back to this slide, no matter what your organization is, however they fall into these categories, we are encouraging all people who have lost hours or wages to apply for unemployment if it makes most sense to you. And this is connected to a later slide. So I'm not encouraging employees to go on furlough. There's an amazing unemployment benefit that was just expanded upon through the CARES Act. And the Department of Labor, this is important to know specifically, the Department of Labor just released more clarity on what is called pandemic unemployment assistance, ensuring unemployment insurance for self-employed individuals. So if you run a nonprofit and you're considered self-employed in some way, or if you have self-employed contractors, for example, they are actually covered under this pandemic unemployment assistance. So we have heard for the past few weeks that unemployment insurance was given to self-employed individuals, but their claims kept getting denied by the EDD. On Sunday, the Department of Labor stepped in and said, this is the way that I want you to handle this by state. So they're currently changing the structure of the state rules so that people can get unemployment insurance. As I mentioned, the CARES Act increased the premium over the usual rate of unemployment insurance, and it extends the length of the unemployment benefit term. So for example, in the state of California, the highest amount you could receive per week under an unemployment benefit, if you were an employee or anyone else, would be $451 a week. Now, the state or the government has come in, federal government has come in and said, in addition to that $451, if you met that maximum, that would be for a highly compensated employee, we're going to give you an additional $600 on top of that, and that's every week. And that benefit is going to be available to you until the end of July, until July 31st. So you could apply for unemployment today, and there's no waiting period there if you're unemployed, and you can receive your whatever the premium is that the federal government sets for you based on your UI status. And in addition to that, you're going to get $600, and that goes until July 31st. After that, the federal government has extended the period of time you can claim unemployment for a total of 39 weeks. Traditionally, it's been 26 weeks. So now it's set at 39 weeks. So that's something that's important information to know. To apply for unemployment, you're going to go to the EDD. Now you can call them and wait in a 4-hour line, or you can just do this online. I highly encourage you to submit your claim online. Okay, so the EDD Work-Share Program. The reason this program is important for you, just like unemployment benefits, is because the EDD Work-Share Program is available at any time. Disruption, disaster, regardless, it's available anytime to you. And really the goal of the EDD Work-Share Program is to minimize the need for layoffs. So the state of California has decided through the EDD that they're going to allow you to keep and create a program to retain trained workers, to avoid the cost of recruiting, hiring, and training new employees, and so that your employees do not have to file for what is referred to as a full unemployment benefit. So they can work reduced hours, and they can remain in your employ so that you can gear up quickly when conditions improve. Excuse me. So you might be asking at this point, what does this have to do with me, and why are we talking about it? Good question. This might be important when you're considering opening again or bringing employees back on again, or you're in a space in a transition period where you're like, I know I can keep X amount of employees, but I can't keep all of them, and I know I can keep X amount of employees for X amount of hours a day. And I'm going to give you an example here. So this program works best when you have an understanding of what the % reduction is in your workflow or production schedule. So let's say you run a child care center and you know that I can only afford, or I only have capacity to keep on my employees, but I need to reduce their hours by 20% in order to maintain the number of children that I have in my facility, for example. So in this example, we have a normal 5-day work week, and employees are paid $500 a week in this normal work week. But we know that there's going to be a 20% reduction because we lost children. We don't have, not lost children, but we lost, children in our daycare, and they're not coming back. Their parents have found someone else for them to go or whatever. So we need to reduce our entire workforce by 20%. So we're going to take a day away from their working hours. So they're only going to work 4 days a week. That means technically they're only going to get $400 a week because we're paying them $100 a day. Now, we look at the employee's UI benefit. Now, if you're paying into UI, like the previous categories mentioned, this is just for an example. We're going to say that the employee is guaranteed or given. We know that the employees are given a $300 a week UI benefit. So if we sent them off packing and we said, you know, you're laid off, go apply for unemployment, they would get $300 a week. But instead, we're going to say, no, we're going to do a work share. We're going to keep you, but we're only going to reduce your hours by 20%. So essentially, the employee would receive 20% of that UI benefit. So 20% of 300 is $60. So instead of paying them $500 a week, we're going to pay them $460 a week, and they're only going to work 4 days a week. So that's how work share works. Know that when your employees, whether you're nonprofit, for-profit, whatever, are accessing their UI benefits either through work share or partial unemployment benefits, they are drawing from that unemployment insurance account. So you need to be aware of what is in that account in order to make these types of plans. And I'll talk about how to do that in the upcoming slides. To apply for work share, you're going to look at application DE8686 on the EDD's website, and you can see that there on the screen. And all work sharing plans are approved for 1 year and can be renewed. So these really work best in situations where you know there's going to be a definite reduction in production or time that you need your employees around. So you can keep them and you can pay them through partially through their unemployment benefit, and you don't have to train and rehire workers or find new workers and train new workers. So if you're an employer and you have questions, there's a number there on the screen to call. And if you're an employee and have questions, there's also a number to call there. What's important to note about this program is that a couple things, that you're charged as an employer, if you meet that specific, if you fall into that category as a nonprofit, if you're paying into unemployment benefits, you are paying into this program just like the work sharing program, just like unemployment benefits. So it's charged in the exact same way. Work sharing benefits are charged to the reserve account of those employers who are in the employee's base period in the same manner as regular unemployment insurance benefits. So there's no like surprise, like, haha, there's another bill in the mail from the EDD. No, it doesn't work like that. You're already getting charged for this if you're contributing into unemployment benefits, if you're in that first category of nonprofit. As an employer, the EDD will mail you a notice of contribution every February. This is the DE 2088 form. Dig this out of your file, wherever it may be, and understand what that form is. That shows you what options you have to either let people off your employee and send them on their way to unemployment, or use work sharing to reduce their hours, and or consider partial unemployment. So partial unemployment is essentially stating to the EDD that I want to keep my employee. You're an employer. I want to keep my employee, but I can't afford to keep them retained at full time right now, and you don't meet the work sharing requirements, which there are some which we can't go over in detail today. So that might mean that you do reduce someone's hours from 40 to 20 hours. So they're going to claim part of that unemployment insurance benefit that's owed to them, and you're going to issue a DE 2063 form to the EDD, and you're going to certify that this is my employee, I want to keep them employed. And on the employee's side, they're going to receive the unemployment benefit, and they're also going to fill out a form every week stating they don't need to look for work because they're still employed with you. But these are the hours and wages that I received. Okay, so these are the two most important programs today, I would say. I shouldn't say that, because I have an advisor who's more of an expert on EDD products, and she would be like, Claire, don't say that. But honestly, pay attention. If you don't hear anything else, please pay attention to these two programs: the SBA Paycheck Protection Program and the SBA Economic Injury Disaster Loan. We're going to talk about the differences between these two programs today and what they might offer you. Give me 1 second. Know that faith-based organizations, and I think that there are a number of faith-based organizations registered and participating in the webinar today, regardless of whether they provide secular social services. So that might be, again, a childcare is a good example of that. A faith-based organization connected to a church that provides childcare options. They may also apply for both PPP and EIDL, and I'm going to refer to them as such moving forward. Although other regulations state that nonprofit entities are ineligible for SBA business loans, because that usually is the case with nonprofits, the CARES Act explicitly makes nonprofit entities eligible for both programs, and it does so without regard to whether nonprofit entities provide secular social services. So you, faith-based organizations, are in the game. So for the Paycheck Protection Program, the purpose of this loan program is employee retention. I want you to hear that from the beginning. The purpose of this loan program is to retain your employees. Now, it functions very differently than the work-share program, than the EDD's work-share program, because that's an ongoing program that's going to be there. This is a CARES Act program that was released just about a week and a half ago. Currently, nonprofits are eligible, but 501c6s are not. So that would be your chambers of commerce and anyone else that is organized around a 501c6. To access this program, and I've already heard from a number of nonprofits that have clarified for me, just as they have in the business community, yes, this program right now is a complete nightmare. I'm not going to sugarcoat that for you. There are major issues with banks following the rules, getting the right information, and not to throw banks under the bus, because they were given a really harsh deal. In this scenario, they were given less than 48 hours to turn this program on, and they weren't given the proper training. Essentially, this program is meant to be accessible through any bank that offers SBA 7A loans. So those are all big banks, essentially, and a lot of small ones, like Montecito Bank and Trust is one of them. So you should be able to access this program if you are a bank member at one of those institutions and you call in advance and you meet the other requirements, which I'll go through in a second. This new loan program will be available retroactive from February 15th so that employers can rehire their recently laid off employees through June 30th. So you can apply up through June 30th for this program. April 3rd was the opening date for small businesses and sole proprietors. April 10th was for independent contractors. So I believe that for nonprofits, April 3rd, the window was open to you. And again, the purpose of this loan program is employee retention. So I'm going to talk about how that works. But first, mentioning eligibility. So all small businesses, nonprofits that specifically are 501c3 and 501c19, veteran organizations, tribal concerns, sole proprietors, self-employed, independent contractors with 500 or fewer employees, or no greater than the number of employees set by the SBA as the size standard for certain industries. This does apply a little differently to nonprofits greater than 500. So if we have those questions later, we'll handle those as they come. The maximum loan.
We do have one of those questions right now. I don't know if you want to address it now or wait until the end.
Let's wait until
the end. Okay, great. I'll ask her.
Thank you. The maximum loan amount is up to 10 million. The loan will be fully forgiven if proceeds are used for payroll costs and other designated business operating expenses in the 8 weeks following the date of the loan origination. That means the 8 weeks that you get the check in your hand in the mail and you deposit it into, I'm going to specify a separate account that is for payroll, interest on mortgage, rent, and utilities. And this is really important because the majority of if you're going to use this program and expect to get forgiveness on this program, the bank, that you receive this money from is going to be the one that determines whether or not your loan is forgiven. And so you want to do as much as you can, work with your CPA, work with a tax person to make sure that that money, that fund is just in a separate bank account. And you pay out those checks from a separate bank account and you don't commingle funds. Just like you would if you were opening your own business account, I just fully recommend that you put this in another account. Your CPA might have another story, that's fine, but you're gonna need to do your due diligence to demonstrate that you are you are only using this money for what actually can be forgiven, or harsh reality, you're going to be paying this back. So you can bring back on your employees up to payroll expenses up to $10 million if anyone has that level of employee compensation in your organization. And essentially, the government is paying for your employees for 2 months. That's essentially what they're doing. But what you want to consider is, what are you going to do after those 2 months? You have 8 weeks covered. You might have had a gap up until now, but what are you going to be doing after those 8 weeks? So the key features of the payroll PPP is that the interest rate is only 1%. And this is across the board. If you walk into any bank and they tell you differently, then you need to walk out or you need to give me a call, because that's not the way this program works. All interest rates are at 1%. They come due at 2 years. So this needs to be paid back within 2 years. The first payment is deferred by 6 months. It's 100% guaranteed by the SBA. There's no collateral. There's no personal guarantees. There's no borrower or lender fees paid to the SBA. Now, I hope you can understand just from those few bullet points why the banks are hesitant to work with this program. It gives them very little guarantee when they have someone come in with no personal guarantee. I mean, it's guaranteed by the SBA, but it's not a cakewalk to get reimbursed by them on the back end, let me tell you, as an organization. So you don't have any collateral. You're not going to offer up your house. You're not going to offer up your car. You're not going to give them your firstborn child. All you're doing is walking in saying, I need this much money to help payroll expenses for 8 weeks. And they're just going to sign over a check to you. It's not going to be that easy, but it can be that simple. So know that those are the rules of the program. What we are suggesting is that you provide, there's a number of resources online that are not included in this slide of what type of documentation you probably should bring in with you to your application if you can get an appointment with the bank. The application is very easy to find online, and it's included in the guide that I will reference at the end. But we are recommending that payroll, that you at minimum, that you pull up in order to do this payroll documentation for the last 12 months for a period of February 1st, 2019 through January 1st, 2020. And the easiest way to find a local lender is to check with your local bank, because what we're hearing is that a lot of banks do not want to do business with you unless you're a client or a customer first. So check with your local bank first. Okay, now on to the EIDL loan. Now, the U.S. Small Business Administration, I'm sure you're very familiar with this loan if you've gone through the Thomas Fire or Hill-Woolsey fires. This is the general low interest loan that the federal government offers, but it was expanded under the CARES Act. And it was expanded to include, we have the normal amounts here, up to $2 million, 30-year terms, 2.75% for nonprofits, etc. eligible for faith-based organizations, nonprofit C, D, or E. It waives personal guarantees and requirements for at least 1 year, and for business applications, and for less than $200,000, and it includes an upfront payment of up to $10,000 for successful applicants. And I'm going to pause there for a moment. So I've had a number of clients apply for this loan. Right now, I know that they're also looking at, just give me one second, additional funding for the SBA disaster loans, because as you can imagine, the U.S. has been hit very hard financially with the small business closures, nonprofit closures, etc. And there are current bills being reviewed right now in Congress to increase funding to direct them to these specific loans. The reason I mention that is because these are first come, first served loans. So the best time to get your application in was yesterday. The best time to get your application in is today. So make sure that if this is what you want to do, that you turn in your application in now. And I want to mention a couple other things. This is very specific language. It's up to 2 million, up to 30 years, 2.75% interest. That's not a guarantee. Okay, so don't be surprised if you're not given $2 million and you're not given 30 years to pay it back, and your interest rate is 3%. So these are up to this amount, or at best 2.75%. The other thing to consider, excuse me, is I'll get back to that. And lastly, I'll say on this before we move to the other slide is that includes the up to $10,000 grant. That is not a guarantee at all. So you want to be careful there. Just reset your expectations, knowing that a lot of people are applying for these loans, and that you will have to wait in line. These loans may be used to pay fixed debts, payroll, accounts payable, and other bills. So the question that I know some of you are asking is, can I apply for both? The answer is yes, but what you need to do is make sure that what you're applying for on PPP is specifically for payroll, specifically for things that can be forgiven, and that you're not applying for the same expenses to be covered if you've applied for EIDL. And that's very important, and you're going to need a tax person to help you separate those. Again, separate accounts would be helpful. There's a lot of ways that the way you track this money is going to give you future favor on forgiveness, or the way you track this money is going to give you greater opportunity to ask for more if you need it in the long run. The filing deadline for the economic injury loan is December 16th, 2020. The federal government knows that in any sort of disruption, that sometimes it takes a long time for nonprofits or business owners to wake up and realize, oh my gosh, I don't have any more money and I need to pay payroll for the next 6 months. Not everyone's a diligent planner, and not everyone has the capacity to spend time thinking about that. So you have a long period of time, but I am going to, if you don't get anything else other than this, at this moment, you need to apply for these programs sooner rather than later. The SBA has also implemented an automatic deferment on existing SBA disaster loans. So if you have one, they've automatically been deferred to the end of 2020. And the SBA does not take into account for approval if you have other disaster loans outstanding. That is not considered in the approval process. What's considered in the approval process right now is current need and loss. If you applied, oh, this is a big one. Okay, if you applied for the EIDL loan before March 29th, 2020, we encourage you to reapply. And I know that sounds terrible and no one wants to do it, but the point is those applications were processed before the $10,000, up to $10,000 grant was, or advance was announced. So I would encourage you to reapply, and I'll show you the link in our disaster guide after, if you have applied before March 29th. And lastly, on the EIDL application, this question has come up a few times. Under ownership, nonprofits should list 0% ownership, okay? Because that's in essence your corporate structure. Okay, a couple other things, and then we're almost done. For 1019 tax filing, please be aware that your federal 990 is still due on May 15th. You can file a 6-month extension as you normally could, but the date was not changed for your federal filing. So the 990 is still due on May 15th. For California, the 199 and the 100 are now due on July 15th. And you can file an extension through the Franchise Tax Board. But know that there was an extension given for California, but not for federal taxes. Make sure that you're aware of that filing deadline on May 15th. Lastly, grants available. I'm sure everyone on this webinar knows it. I had to include it just in case. The Santa Barbara Foundation and the Hutton Parker Foundation are offering grants up to $25,000. I know they got a large, generous donations right after this and are giving generously to the nonprofit community serving all regions of Santa Barbara County. So if you're not aware of that, please check that out. So what option is best for me? This is essentially what I spend my day thinking about and what I spend my day answering questions for or questions around when I work with clients. And here's some key considerations to consider whether you're a business or a nonprofit. The SBA's Economic Injury Loan and Paycheck Protection Program are meant to cover different expenses. We talked about that. So do you have losses that aren't related to payroll, or do you have losses, I should say, in your nonprofit? And do you have payroll related expenses? If the answer is yes, then you could potentially, you could apply for and potentially receive both. Know that PPP covers payroll related expenses, rent, utilities, etc., up to 2 months. So again, ask yourself, what am I going to do after 2 months? Like 2 months from now, I don't even know the date anymore because, okay, it's Tuesday, April 7th, so April, May, June. So June 7th, if you apply today and you get 8 weeks of coverage for your payroll, what are you going to do in June? I don't know what's going to happen in June. No one has a crystal ball. So think about how you're going to be either saving, restructuring, reordering your workforce in order to manage your cash flow right now. That's the most important thing, is managing your cash flow. The SBA's Economic Injury Disaster Loan provides, again, up to that $10,000 advance, and this is meant to perform as a grant. So just to clarify, that $10,000, if you were approved for a $50,000 disaster loan and you received a $10,000 upfront grant, you are only going to be held responsible for paying back that $40,000. The EDD's WorkShare program works well in manufacturing environments or production type environments, or I love the childcare environment example as well, where certain amount of work hours are going to be reduced consistently for a certain period of time. Consider that program above all else before you consider furlough, where you're just letting employees go and they don't have access to the amazing unemployment benefits right now, or you have the potential to put them on a WorkShare program or cover them for 2 months under PPP. And lastly, I've said this before, the SBA's PPP program is still being worked out. It's a challenge. It's not easy, and banks are in a hard position. I've said all that. I'm going to get off my soapbox now and just give them some grace and patience. For additional services, know that the Small Business Development Center also offers nonprofit consulting. And if you need any additional assistance at this time, you would register as a client of ours. And it takes about 10 minutes. You would call our business hotline. And we have legal, financial advisors, operations specialists, human resource human resource consultants, marketing and branding, really any area of need in a nonprofit. We actually have a nonprofit specialist that also offers consulting in fundraising, and I have a background in fundraising. Actually, I'm one of our consultants, so we have a lot of consultant capacity to help you navigate which options are best for you. To access our resource guide, I have just today released the addition to our business resource guide to include a lot of this information that I've given that applies to nonprofits. So the business resource guide is located on our website. It's edcollaborative.com/COVID-19. It's right there on the screen. You would just point and click at that arrow, and then it would take you, that's the business resources page, and then another drop down would come up that would say COVID-19, and then it would take you to this little guide where this arrow is down below. Now, our guide is separated into 4 sections, and you just click on the section that applies to you as nonprofit, and it will take you directly to what services and options and benefits are available to you. And again, a lot of this information is there and in much greater detail. All the links to all the Department of Labor, EDD, etc. are going to be there for you. So again, my name is Clare Briglio. I'm the Communication and Business Disruption Resource Director. To contact our office, we are taking appointments now. We have increased our staff capacity to handle the call volume that has come in the last 3.5 weeks. It's been unbelievable, as you can imagine. Call our business resource hotline at 805-409-9159, and you'll be connected to either a bilingual staff member if you need Spanish speaking services, and or English speaking staff as well. And now we'll move to Q&A.
Great. Thank you so much, Claire. That was a lot of information to pack in, and please take a drink of water or two. Your work's not done here yet. So everyone, it is the Q&A time. If you can see at the bottom of your Zoom screen, there is a Q&A button. Please type in your questions. You can also see the answered questions that have already been answered by the Visionality team. And also, I just want to say hello. Also, I forgot to introduce myself. I'm Dave Fortson. I'm CEO of LOACOM and head community manager for the Nonprofit Resource Network. So welcome, everyone. If you joined us late, Claire just dropped a lot of knowledge on us over the past 50 minutes or so. We have until 2:30. We just kind of arbitrarily moved the goalpost to make sure we could get as many questions as possible. And as a reminder, this is being recorded, and you will be able to share this as well as all the questions and answers with your team following in the next 24, 48 hours as we get this all packaged up. So with that said, Emily, I'm gonna turn it over to you for Q&A management. Thank you for doing that. And thanks again, Claire.
Thank you.
All right. Claire, you ready?
I'm ready. I'm on the hot seat.
Hot seat time. Are SBA bridge loans available to nonprofits?
The SBA bridge loan product should be available to nonprofits. But listen, this product is a repackaged product from 2017. So I would encourage you to call our office first before going down that road. I will work with you and get as much information as I can before telling you to go down that road, because my concern is that it will lead you right back to idle. And that will be the best option for you. So I don't want you to waste your time. So you're welcome to connect with me to research that.
Thank you. Does any portion of the CARES Act apply to nonprofits that have more than 500 employees? And does the unemployment reimbursement apply to nonprofits with more than 500? So do any of the programs apply to more than 500?
They do, and they do. And I focused this presentation thinking that we would have nonprofits with less than 500, but in the guide, there are links to the SBA site that contains information on nonprofits, either affiliates, like if you're, for example, the Salvation Army, you're the local Salvation Army and you're affiliated with a larger organization, there's rules there. If you're I don't know how many employees direct relief has, but if you're direct relief and you have over 500 employees, whatever it is, there are links that will give you that information. And yes, yes, there is coverage and options for you.
Great. To tap into the 50% reimbursement for unemployment benefits, does it happen automatically or do we need to apply?
Okay.
And they're in the experience rating category. And good for you, Rick, for knowing that. I'm proud of you.
Yes, that's really good. That's really good. That's an excellent question, and I'm going to have to defer to your tax advisor, because most often either the here's two things that can happen. Either the EDD has its act together and they'll send you a form, or that's not going to happen and you're going to have to figure it out at the end of the year with your tax person. So I would recommend first checking in with your tax person and seeing if they have an understanding of how that works first.
Great, thank you. And just a note to everybody, we're collecting all of these cues, and if we're deferring any of the answers, we will continue to follow up and get new information and let you know when we have those answers. Are contract employees eligible for benefits under WorkShare?
Are contract employees eligible for benefits under WorkShare? Applies to employees. So if you're a contractor, you have a lot of different options right now. You have the paycheck protection. You can apply as an independent contractor to have the paycheck protection program. But if you are an employer and you have contractors and you're trying to manage them through WorkShare, I believe those are only W-2 employees, because the program works by paying into that WorkShare benefit.
Great, thank you.
Yeah.
Is a DE 2063 required each week?
That's a WorkShare form, I think. You're going to have to clarify what form that is for me, because I have too many form numbers in my head right now.
All right, John, go ahead and post that in the chat and I'll re-ask the question. If approved for the PPP loan, do we need to hire back our employees right away or just before the end of June?
Oh, I'm going to say great question to all these, because I think that they all are. The point of the program is to rehire them. I think the reason that you might want, I don't quite understand the reason why not to rehire them immediately. Are you trying to extend the benefit in some way? Because it's only going to give you 8 weeks. So maybe clarify the scenario a little bit more, and I can try and answer that.
Well, and reading from our guide, you have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So take that and then weigh it against, we only have 8 weeks. So Casey, if we answered your question, great. If not, repost it in the Q&A with more clarification and we'll give it another shot.
Yeah, because I think the concern is you receive, let's say you apply and receive the benefits today, and then, which isn't going to happen, number one, but if it did, then you're going to wait till the end of June to rehire, and you're going to hold that 2 months of salary and not pay. You're going to wait until rehire until the end of June. It almost doesn't make sense to do that. Or I don't understand why to do that. So, okay, sorry, go ahead.
How long do staff have to be retained to convert PPP loan to a grant?
Ooh, yeah, I'm still waiting to know that. I'm still waiting to know that answer. And once we know it, it's going to be plastered all over our guide, because that is one thing that we need to know. We have differing opinions and information that I don't want to confuse anybody and to share, but I don't have a definitive answer right now.
Great. And for anyone who's looking for the Q&A function, if you put your cursor over Claire's lovely face and then you drag it down to the bottom of the screen, there should be a little chat box that says Q&A. And if you click on that, it'll pull up and you can type your questions in. Okay, PPP loan application asks for balance of idle loan. Can the PPP loan help pay for the idle loan? And is the 10,000 idle advance subtracted from what you receive for PPP?
Very technical question. I believe that the PPP, like I said, you can apply for both. You can choose also to refinance one into the other. Now, I'm not going to go too far down that rabbit hole because I'm unsure. I'm unsure of that of the technical requirements for that, but rolling them into each other, yes, is a possibility. How that's going to be managed, I don't know, because the bank handles the SBA loan. I mean, the PPP plan. The SBA handles the idle loan. So know that if you're getting both, you're going to be dealing with two separate entities. You're not just going to be dealing with the SBA.
And they're going to look and make sure that you're not double dipping those funds. So you can't apply for two pots of money and get two sets of money for the same expense. So just make sure that's super clear.
Yes, thank you, Emily. That's entirely true.
Okay, the loan will be fully forgiven if used for payroll, et cetera, and the terms are 2 years and 1%. So if they use it for payroll, do they still have to pay the interest? So if the loan is forgiven, is the loan and the interest forgiven, or just
the interest forgiven? My understanding is that that it's forgiven in its entirety. If it's not, it's going to be a very small amount of interest. Well, depending actually, because it's up to 10 million. But my understanding is that it's all forgiven, and that there's no penalty for payment. What's it called when you pay a loan back?
Prepayment penalty.
Yeah.
I think that's the right assumption, and if that's not true, we will definitely let you know, because our assumption is that interest and principal will be forgiven. We are almost exclusively funded by state and federal grants and are delayed in completing our deliverables. In this case, are we eligible and encouraged to apply for PPP?
I would have to know more about your situation, because I would almost think that the idle loan would be better for you. If you're losing the capacity to pay your employees and you want to try PPP first, and have coverage for 2 months and then apply for idle after, you can do that. I would have to know more about your situation. From what you said, I don't see that one is better than the other.
And just for everyone else, we're having some success asking funders to be a little looser on the restrictions. I doubt that the state and federal grants will be open to that, but if you have other foundational grants, definitely ask them to loosen up the restrictions around the grant to use it for this, the kind of struggles that you're having around COVID-19.
I think, Emily, that's a really good point. And one thing we should kind of harp on here, even in our organization, there's money flowing in different places to help serve business communities and nonprofit communities. And in moments like this, we are all being asked to be more flexible. So I would certainly have conversations with your grantors and ask them for flexibility with certain money that was directed towards X, Y, and Z.
Well, and also call every single person that you pay every single month and ask them either for reduced payments or deferred payments. So I did this for my business. 100% of them said yes. No one gave me any grief. It was super easy. So just make a list and just call them one by one. You'll be waiting on hold for forever. And literally, I reduced my overhead by $3,000. So do it. Don't wait. That's my soapbox.
Thank you.
This next question is from my friend Alondra. Good to see you. Not sure if Claire can answer this. it's an employee-focused question, but for those of us that are losing some hours due to having to care for our children because of COVID-19 closing daycare, should we apply for UI workshare or FFCRA, extended family leave, and how do we apply for the program?
Okay, so is she an employer or
She's an employee?
Yeah, so okay. So under the CARES Act, the FFCRA was expanded to include provision for nonprofit employees. I did include that in the guide. Workshare, I just want to clarify this in case it's not clear to anyone else. The employer needs to be the one determining if they are going to change the employment arrangement with you and create a workshare scenario. Workshare, it applies to the team, not just the individual. So you cannot, as an individual, apply for workshare. That's not how that works. The employer decides, we're reducing everyone's hours by X amount, and this is how we're going to do it. If you have COVID-19 family-related obligations, illness, or anything else that falls into that, FFCRA is intended to extend the disability benefits that you are entitled to under that provision. It expands it by 2 weeks. I think it's 2 weeks paid leave. And there's more information of that in the guide. But in this situation, Alondra, I would say that that's your right to research as an employee. And then if you have any questions, you can contact our office and or present that information to your employer, because they should know that as well.
And in the guide, we have that FFCRA broken into 2 categories. So the first category is if you specifically are quarantined or you're sick. The second category is if someone in your family is sick, or exactly this, you are having childcare challenges. So check out the guide, it's pretty detailed, and then we can help you bring that information to your employer.
Yes, thank you.
Oh, this one's my favorite question. Do you have a guess about how many days it will take the banks, such as B of A, to approve the funds for the PPP loans?
Oh my gosh, if I had that question answered, I think I would be a millionaire by now.
There's no way to know.
What we know. Okay. Harsh and sobering truth. What we know, I've said this a couple times. It's kind of a very undesirable situation right now. If you've applied to B of A, I've heard anywhere from 10 to 17 business days. I've heard anywhere from 2 to 3 weeks. I've heard 2 to 4 days. I've heard 48 hours. So, shoot if I know. I mean, and the other thing is that we've heard people go into banks, and I'm not trying to be cavalier about this. I'm just saying this is how fluid and how unprecedented, to use that term over and over again, this moment actually is that we're all living in. We had a client go into, I think it was Union Bank, and don't quote me on that. I hope there's not a line at their door tomorrow, but apply for and receive PPP in less than 24 hours. So the stories have been all over the map. In fact, I'm going to look at my phone because they just received, I just texted them this morning and to see how it was going for them. Apparently it's a longer conversation, so I'll have to call them back. But the point is, I don't have that answer, and I wish I did, and I'm sorry.
I want to say too, there's a lot of misinformation about the $10,000. So it's not an automatic $10,000, boom, you get it in 3 days. So talk just briefly about that. Yes,
it's not an automatic 10,000. It's an up to 10,000 upon an accept, what did we call it? What was their language?
A successful application.
A successful application. So in government speak, that means they've approved you. So that, again, is not an automatic 48-hour turnaround. In that situation, I heard specifically from our SBA public information officer that it can take 10 to 17 business days to hear from a loan officer. Now that application, if anyone has applied for the EIDL application, you might have observed how simple and easy it is. That is not the loan application. That is the first step in the door. So they will be calling you and asking you for everything, projections, everything under the sun in order to complete your application. What they will do, and what we know is that when you submit that form online, and it's whatever it takes, 10 minutes to do, and you choose, yes, I want that up to $10,000, that $10,000 is determined, we have been told, by employee count. So my suspicion is that sole proprietors, contractors, they are not going to get up to $10,000. And is it going to be turned around in 3 days after an acceptable application? I don't know. I haven't heard of anybody getting it yet. So I'm waiting to hear that. And there was one other thing I was going to mention about that. You need to understand your credit score, or the organization's credit score, because if the organization has a credit score of less than 650, it's going to be difficult to get some of these loans and programs. And if that's the case, then we can talk with you and work on ways to get your credit score improved.
The other clarification I want to make is there's not a $10,000 EIDL grant. You're applying for a loan, and then they can opt to approve you for up to $10,000, which will be converted into a grant. But there aren't two separate programs. There's not the loan and then the grant. Is that correct?
That is correct. That is correct. Although it does perform, so it's tricky because it does perform as a grant, right? So if you got $50,000, I think I used that example, and you were given $10,000 up front, then you would only owe $40,000.
Got it.
But to your point, yes, they're not two separate programs going on.
Got it. So Stacy's asking this question, is a 501c6 eligible for EIDL? And the answer is yes. But then the second part of your question, Stacy, we have no paid staff, but have lost income through membership fees and commissions from sales, and our expenses are rent and utilities. So talk about, again, the approved uses for EIDL.
That would be for you. Rent and utilities are approved under EIDL, and I would investigate that further. That sounds like the best option for you. And especially if you can document loss in donation. What did she say the losses were coming from?
Membership fees and commission from sales.
Yeah. I mean, that's a perfect example of an EIDL, a good EIDL application.
So the PPP has the 75% minimum. You must use 75% of PPP funds to go to wages. EIDL has no restrictions on where it can go.
There are no restrictions at this moment of anything that I've read on it that would require you to say, this pool, this 35% is being used for this, and this 75% is, or that's over 100, whatever. The 65% is being used for this. That's not how that program works. The reason that payroll protection, the Paycheck Protection Program, is set up that way is so that the government ensures that you're using that money to put people back into your house, into your office, into your organization. I shouldn't have said house, but into your organization, because it's meant to be a deterrent against having people unemployed.
Great. So this question is, am I correct in saying that PPP loans are only forgivable if you do not furlough employees or reduce hours? And if you're hoping to get your PPP loan forgiven, we don't want our employees to apply for unemployment.
Okay, so there's two questions here. Let me clarify this. The first one is that PPP is good for, I'm sorry, Emily, say the first part again.
Are PPP loans only forgivable if you do not furlough employees or reduce hours?
That's right. Okay. So if you've already furloughed employees, the beauty of this loan is that it's retroactive. So you can go back to, if you did it before, remind me of the date, February 15th?
Yes, ma'am.
So if you did it before, or February 15th, on February 15th or before, you could go back and bring those employees back. And if you furloughed them, and you could bring them back and have them on board, covered for about 8 weeks. So it's intended to bring back furloughed employees. It's intended to bring back employees that you put on unemployment.
So unemployment is better if the work has been reduced and you don't still need your employees, and PPP is better if you still need.
Well, yes and no, because you could have employees, and sorry, all these are confusing programs. So if I sound confused, it's sifting through all that is confusing. But technically under PPP, you can pay your employees to sit at home on the couch. All the government is doing in this program is it's saying, I'm going to give hopefully the workforce 2 months to not be unemployed. We're going to cover your paychecks for 2 months, because unemployment most likely is going to be less than your paycheck. I mean, let's just be honest, it's going to be less than your paycheck. So I'm going to cover that period of time for you, and hopefully this whole COVID-19 thing is over after 2 months. The likelihood of that happening is not as realistic as we might have thought 2 weeks ago. So in that scenario, what I'm expecting is that those who have opted for the Paycheck Protection Program and they've used it and they've extended their benefit, for those 8 weeks, and they have those 8 weeks, now what are they going to do with their employees? They don't have sales, they don't have anything coming in the door. Those employees are going to have to go on unemployment.
Mm-hmm.
There's no, I want to just make this very clear about furlough. There is no value giving to the employee by putting them on furlough right now. You should be giving them the opportunity to apply for unemployment benefits. That's important. It would be responsible as an employer to put their employees, and I'm speaking generally, to put their employees on furlough right now when they have unemployment benefits available to them. If you fell in that category where you were investing into unemployment.
Thank you.
Mm-hmm.
We've had a few questions about nonprofit credit scores, and I don't know this answer. How do nonprofits get credit or know their credit score?
Okay, so excellent question. Some nonprofits have lines of credit with banking institutions. Because ownership is set at 0 on that application, I'm curious whose credit score they would be running and how that would be determined.
I think the answer to this is we'll find out and we'll let you know.
Yes.
How do you factor part-time employees when determining our last year's payroll on a full-time employee basis?
Maybe I don't understand the question. So you had part-time employees last year and now they're full-time?
No, I think the 500 employee limit says 500 FTEs. So are part-times counted in that 500, or do you add up all the part-times to equal out the respective number of FTEs?
Phone a friend.
Phone a friend. Okay, well, we'll figure it out.
Okay.
We'll get back to you. Thank you, anonymous attendee. We'll get back to you. Any information on how the forgiveness rate will decrease if you don't fully reinstate everyone? Any calculations we can use?
I just want to go back to Gary because he put something in the chat and I thought it was interesting. He said he spoke to many bankers and nonprofits do not have a credit score. So this is interesting to me. because you know that most often nonprofits aren't eligible to apply for federal loans. So how they're going to determine your eligibility if they're not using credit score is something that's at this point over my head. So I'm going to have to get back to you on that. And I think that's a really good question, because we've been told very specifically some of the standards that they apply to businesses, but the nonprofit, I asked our SBA PIO yesterday, he said there's no manual for nonprofits applying for these types of loans. It's not like the disaster loan has just appeared overnight. I mean, it's a very common loan. It's been used for, you know, however many years before the Thomas fire. So we're going to have to do a little bit more digging there, because there's definitely ways that nonprofits are denied these loans, and we want to figure out why.
Great.
9 more minutes.
9 more minutes. Here we go. So talk to us about any info on how the forgiveness rate will decrease if you do not fully reinstate everyone.
I don't think that you're going to get, I don't know if they're going to give lenient, like some sort of lenience there. I don't know. I don't know if that's the right term, but I think it's kind of all or nothing, but I could be wrong. I'm still waiting to find that out. We certainly have a lot of businesses that are in transition periods where they can't afford, it doesn't make any sense for them to bring back their entire workforce. So we don't know.
Okay. Does the $100,000 cap on compensation include benefits?
The 100, oh, if that's for the EIDL loan or the Paycheck Protection Program, I thought it did.
I'm looking at the guide.
I think that's in the guide. So I would look at the rules that I have outlined in the guide around paycheck protection.
Yep. Sorry, I was trying to, it looks like it includes benefits, but it's more details in the guide.
Okay.
If we are awarded PPP, do we have to rehire all employees, or can it cover those we currently have on staff?
Is this the same question that we just answered?
No, it's a little bit different.
Yeah. Gosh, good question.
More clarification to come.
Yeah.
Okay, I'm an employee and I have multiple.
Oh, wait, let me just say this. Look at the date though of when those employees were let go, because
Yes.
This was a specific window, the 15th of February. So look at that. Look at the way that's written in the guide, and then we'll also get back to you.
Yep. I'm an employee. I have multiple jobs. I would like to apply for unemployment for one of them, but don't want to affect the forgivability of the PPP loan we applied for with my other job. Would my unemployment claim for one job be seen as separate from the other job?
Unemployment benefits are going to take into account any additional income that you're receiving. So whether that's a settlement or whether that's, it's going to take into consideration any additional benefit. So I don't see the need to apply for unemployment and the Paycheck Protection Program, because it actually should, the Paycheck Protection Program should take into account as you file, like, are you a sole proprietor?
No, she's an employee. She's
an employee? So you can't apply independently as an employee for the Paycheck Protection Program.
No. So she's got multiple jobs, and one job has gone away, and then one of the other jobs, that employer applied for PPP. So she doesn't want unemployment for job one to affect the PPP forgiveness of job two.
Oh, I don't think, you're not going to have to worry about that as an employee. What you will probably see is a decrease to your unemployment benefit from the other job, because you're receiving income that will offset something. So you might have to be reporting that income that you're receiving.
Yeah.
But I don't know, because we've never had the Paycheck Protection Program and UI running at the same time. This is new.
Yep. Thank you. Regarding the idle language related to fixed debts, payroll, accounts payable, and other bills, as I understand it, loan funds must be used for those kinds of expenses specifically during the period that that business is being impacted by COVID-19. For other instances, can idle funds be used for repairs that we may not have planned to complete during the time, but now seem timely as no patrons are in our building? I think the answer is no.
I think the answer is no too. But the SBA has other loan products to meet those types of needs. And I'll say I can't say because we don't give to nonprofits, but the SBA has other loan products. I'm just curious. I don't know how they would handle that. That's a question. Let's leave that open as a question.
It's a good question because if your operations have slowed, it's an excellent time to be doing any improvements.
Mm-hmm.
Beverly is asking if EDC help them guide the process.
Yes, we do.
Thank you. If approved for PPP, do we need to hire back our employees right away or just before the end of June? Maybe this is a repeat.
That's a repeat and a good question. We need to find that out.
So the reason would be for cash flow. It's not that I wouldn't prefer to hire back everyone, but I just want to know if I need to pay employees for the full 8 weeks or hire them back at a later time to preserve cash flow.
I would say that the bank should be giving us that answer.
Okay.
I don't know right now.
Okay. We are a church that does not provide any non-secular services. We tried to fill out the idle application online yesterday, but it required us to certify that we did provide non-secular services. Will the application be updated, or how do we get around the certification? I think this is an outdated issue because very specifically PPP and idle have been expanded to include churches that do not provide non-secular services.
Which we updated that yesterday on the guide. So I don't know when you went into the bank, but I would try again and pull that information directly. In fact, there's a PDF from the Department of Labor, I think. That's it. No, it wasn't. It was the SBA that specifically talked about PPP and idle and their acceptance of religious entities and non-discrimination policy.
Yeah, they released an FAQ yesterday, I think, and if it's not already in the guide, we can add that because they're very specific about this.
Yeah.
Okay, we have 2 minutes left. Can you give some other examples of idle loan expenses that would differ from PPP?
Well, for business, it's a little easier because so let's just say payroll and rent and mortgage interest is covered with PPP. You could have business loss of we talked to a guy yesterday. He was a cheese delivery man, and he had loss because business product loss because his cheese went bad, the refrigerator went bad. Any sort of imperishable item, for example, loss of contracts. I was working with a painter that lost $500,000 worth of contracts in the next 6 months that he had lined up, or events like if your church, is a wedding venue and you've booked $20,000 worth of events in the next 6 months and those are all gone, that can be another type of loss.
So the overlap in idle and PPP is payroll and some portion of fixed debts. What idle adds is accounts payable. So maybe you couldn't get out of you had an event and you couldn't get out of the catering contract. So that would be counted as an accounts payable. And then other bills, which is really vague and there's no way to know what that means.
Exactly.
We're at 2:30. We still have 11 questions. And so everyone, our commitment to you is to triage these questions and to answer them as quickly as possible. And again, please be generous with us because this literally changes 5 times a day. And especially for nonprofits, it's like this is the first time a nonprofit has ever done anything. So we're on it to help translate everything for you.
Yeah, and I just want to say, especially with the PPP program, there has been conversation in Congress and different advocacy groups, especially through the chambers, because chambers can't apply for PPP, that the 501c6s are trying to advocate to be included in that program. I don't know if it's going to happen, but as long as this COVID scenario runs its course, we will continue to see changes come down. So I encourage you again to continue to look at our guide on edcollaborative.com/COVID-19. I update it daily, if not every other day, and all if any and every change that we can get our hands on will be included in that guide for nonprofits and businesses and employees, and that's it. Yeah.
Hey, Claire, question for you. How if people just, how do you want to protocol people getting a hold of you at this point? Do you want to focus that conversation at all, or is it, how do you want to do that?
Yeah, I want to be careful there because not because I don't want to interact with everyone on this call, but because people have so many different cares and concerns that are all super important, and I know that I am not always the best person to answer them. So the best thing to do is to call our resource hotline, 805-509 409-9159, and you'll either get Alondra or Stephanie or someone on the phone, and you're going to tell them, I just went through this webinar and this girl was amazing and she gave me everything that I needed to know. And you're going to say that you might need to talk to someone else, and then they're going to ask you a series of questions, and then based on those questions they're going to connect you with the right person. Now if thank you so much. If there was something that I said that I would get back to you on specifically, a member of our team will, or I will. So don't worry about that. We will handle all the questions. But we do have a team of 30 consultants, again, with every area of expertise in different fields. So I'm not always the best person to connect with on this, on everything, but that's what I recommend.
Great. Well, thank you so much. Emily, any closing from you? You have anything?
Thank you all for hanging with us. I know it's so confusing and scary and all those things. And like, really, I promise we're working on helping you all navigate this, and we just appreciate your patience and hang in there. It's hard, and you matter, and you're important, and you matter more than ever. And so it's our job to help you weather this storm.
Yes, thank you.
Wonderful. And so just as a reminder, this has been brought to you by the Nonprofit Resource Network, Santa Barbara Foundation, the Center for Nonprofit Leadership at Cal Lutheran, and Visionality, who's been managing the Q&A. Thank you, Emily and team. And a special thanks and digital claps to Claire for answering something north of 50 questions along with the Visionality team. Really just grateful that you were able to spend your time with us. So as a reminder, you'll get all of this in a recorded webinar, the slides, as well as the Q&A provided to you. And I do expect we may need to do something like this again in the future as the environment changes and new information becomes available. In the meantime, just know we're as Emily said, we're all with you. So we'll be pulling through this as best we can together, and just hang tight, folks. It's going to be a wild next couple of months here on the West Coast, if not more. And we're going to need we're going to need all of us in this. So thanks a bunch, everyone. Enjoy the rest of your week. And if you have any questions, please hit us up. Anyone else?
Yeah, Claire, real quick.
Yeah.
So we're still having questions pop through the Q&A. Do we want to set up like some kind of form that collects these questions afterwards so that we can triage them and get them out?
Yeah, David, what is your best I'm not sure how to do that technically. What do you recommend?
I mean, an easy way, and again, we haven't discussed this in advance, but you can send them to info@nprnsb.org, and we can run them through the team here and get them up into Visionalities, a document or other documents or however it works. Also happy to send them into Visionality, whatever works. But worst case, I'll just put it in the chat as one option. And again, these would just be, as Emily mentioned, a triage of how do we put all this together. So more questions, see the chat, info@nprnsb.org.
And my guess is if we're getting a large volume of questions, we'll create some kind of form to help us collect and manage those. So whatever we're going to do, Claire will send you an email. We're going to keep you all the way up to date. Any changes or whatever to this process, we'll make sure we communicate that to you.
Yeah, and Gary just mentioned, I think it's probably a good idea. Emily, not sure how you're doing the other questions, but if maybe we can make this a shared dynamic document, either it's in Google or some type of shared drive, or with a view only.
Yeah, that's exactly what we're working on. There are so many questions and many of them have specific nuances. And so collecting all of those questions and organizing them in a easy to maneuver format. So we're working on it. It's definitely not ready and it's a really large task. So please be patient with us. We're working on it.
I think what I might do too, just processing out loud with the few participants that we have left, is include, and I keep directing people to our resource guide on our website, but if I have the email addresses of everyone that has participated today, I'll just set up an Outlook group so that each time I get an update and the guide is update, I'll just do a quick email blast to them so that they have that information.
Perfect.
Lovely.
Yeah.
All right, everyone. It's time to give everyone breaks. Get away from video for 5 minutes, get outside, stand up, get some fresh air, and then let's get back to work. Bye, everyone. Have a great day. Thank you so much, everyone. Take care.
Bye.